Hey, welcome to my channel. Technical stock analysis for crypto stocks, ETFs, commodities, anything I get a ticker for. I will do some technical analysis for. You do your fundamental analysis, send me an email with the company and the ticker. I'll mark up a chart, post a video, and you can see what the technical analysis is saying, what it's telling you to do. You do your fundamental research, I'll just help you with the timing. That's all I do. My whole thing is about simplicity. I'm not going to mark this thing up with lines and figures going all over the place. I'm going to keep it as simple as I can because simplicity does work. And this doesn't have to be complicated. I'm convinced a lot of the complication in investing comes from the investing world trying to keep you out of it, kind of like the legal world. Law makes sense. They just term it in a way that doesn't make sense. Investing makes sense. Technical and fundamental analysis makes sense, but the verbiage using it, that you use with it is what makes it complicated. So I'm just going to make this simple. For a long time, I've been thinking about crashes, not dips, but actual crashes. And if there's a spot where I could figure out where we're going to crash and not just a pullback, not a buying opportunity, but maybe an opportunity to get out. For no other reason. Like here's 2008, the big crash. If you could get out up here, you save yourself this whole year and a half of crap. The other reason is if you can free up some capital at the beginning of a crash, what brought you up to the top of the bull market before the crash is not the same companies and sector allocations that are going to take you to the top of the next bear market. This bull market was made up of stronger companies than what we're in here. All right, so when you can get out early in a crash, you get a lot of capital to put back in for the new things. You'll have dry powder ready for the new things that are going to take you up in the next bull market. Also, at my age, I'm not in my 20s or 30s, my early 40s. I need to preserve my capital, and I can't go a couple years with a big drawback, a big drawdown. I would need to be mindful of that. So I'm looking for ways, easy, simple ways to find out if we're in a crash or just a pullback. Here's what I found. Here's the RSP. This is the S&P 500, but it's equal weighted. It's not market cap weighted, so it's not the top 10 or 20 companies doing all the heavy lifting. This is what everything in aggregate is doing together. I love it. Once again, it's simple, and it tells me what everything's doing, not just the space companies, the chip companies, or whatever's in favor right now. Sorry, I'll take off. The white line here is my 34 moving average. We're on a weekly chart, so it's a 34 weekly moving average. Each candle here is a week's worth of price action. I'm just going to get rid of that. Purple one here, 200 weekly moving average, simple moving average. I don't do anything complicated. Check this out. On pullbacks, we hit it. We hit the 200 moving average on the RSP, and we bounce back up. Candle underneath. Next one's taking us back up. COVID crash, a whole lot underneath. Now, the COVID crash is a bit of an outlier to other crashes only because the government's pumped so much money into the system so quickly that the market didn't really drop as far as it could have or should have or might have had they not done that. I'm thinking, had they not stepped in when they did, they might have gone down to here, right? This top here, these tops here, these are all pivot points. This could have easily come right back down to here. So once again, you would have multiple candles underneath the purple, and you would know you're in unsafe waters. Here again in 2018, hit it and bounced off, hit it, bounced off. I have no idea what this spike is here, so I'm ignoring that. That's a one-day event or one event or something wrong with the software in my platform here. This is coming out of 2008, and what I want to look at is beforehand. Here's your 200 moving average, and you're well above it. See how we came under, got over it, stayed hugging it, didn't make a big break above it, barely got above it, came back again, came up, and then that third time in a relatively short period of time we came under, and then we couldn't get back up. This right here was your selling opportunity. All right, when the markets, the stock prices on the RSP came down and couldn't get away from this 200 and stayed under, that's where I want to be a seller. I want to free up my capital. I'll get back in. Here's sort of the trend line that I would follow. I'd want to see this get broken to the upside. So I'd start buying back in. Actually probably waiting to get above the 200 again. However, because I sold up here some of my stuff, I've now got capital to get back in. And once again, the companies that were pulling this up here aren't the companies that are going to pull us up to the top of the next bull market. So I would have cash ready to deploy into the new market that's evolving coming out of the crash. And I wouldn't have to be walking around with a pain face holding on to stuff through here. Some stuff I would hold. Obviously, I wouldn't liquidate everything, but you know, things like this are these are big changes in the markets, and you want to change on the outside, on the other side of it, coming back up. Now, so that's one. The RSP is one sort of fund that's indicating this move. The other that would confirm it. I'll go to the monthly chart for a second. This is the Dow. Dow Jones. I only look at it once a week for this exact purpose, to see how close we're coming to this. It's a useless index. It's 30 stocks. It used to be the OG back in the day, back in the late 1800s, early 1900s. Now it kind of means nothing. It's 30 stocks that don't fully represent what the markets are doing. However, we go back to this weekly trend line, and you can see here the exact same thing. We come to it, we get away, we come to it, we get away, away. These are just pullbacks to buy. We're not crashing. Once again, COVID. Crashing. All right. Now, there isn't a lot of reaction time because we didn't do what happens in 2008. It sort of crashed, but either way, this could have gone down a lot further. See, it sort of stopped here. Could have easily come down to here, right, this top here. So once again, capital preservation, changes that need to be made on the other side. Selling a little bit in a crash, something, is a good idea. Here we go. We follow the 200 moving average again. Hit it out. And once again, 2008, the Dow came under, and it didn't quickly pop back up. We had, look at that, these are all weeks, so it's at 7-8 weeks of not being able to get above it. That's your opportunity to sell. That's how you know you're in a weak market, right in there. You could have got out there and let all this happen. Not get out, but just done some selling. Let all that happen. And somewhere around here, we break coming out here, getting it back above the 200 MA moving average. That's your opportunity to get back in with capital. All right, and that's the big thing here, is that once again, what got you up this hill isn't what's going to take you up this hill. So in the next crash, whatever got us to here, the AI and chips and tech and whatever, when we crash again and come out, I pretty much guarantee it won't be those companies that take us to the next bull market. I have a funny feeling it'll be probably a commodity company of some kind, maybe an oil company, but it won't be tech. So when we crash again, I'll want to sell some tech. I want to sell some things so that I've got capital deployed going back up. Anyway, you can see even before 2008, well, this is 2001, same thing. You saw these indicators happening, and you could have, it wasn't a big crash for the Dow because it wasn't, the 2001 was more of a tech crash. But you could have had a chance to get some money out, say buy yourself this time here to be thinking about what you want to do on the other side. Like, touching it, going away, touching it, going away. All in all, on a weekly chart, look at the Dow, look at the RSP even once a month, and if you start to see it coming down and getting close to it, and then you see a couple of candles, not a touch and a bounce, but a break down and then a stay down, all right, it comes up and it doesn't get away from it, that's a chance that there's some insecurity going on in the market, and it's time to just have a plan. Who knows what it'll be? No crash is the same, and whatever's coming won't be like 2008, won't be like 2001 in a lot of ways, but in a lot of ways it'll be similar, and that this breach will happen, and that's all you need to know. And then you take this time here to learn and understand what's going to be coming next. All right, hope that helped. Once again, send me an email, send me a stock or ticker. I'll make you a chart, and I'll show you what I see. If there's an in point, an out point, stop losses, how I would play it, and maybe that'll help you with your timing as well. Once again, the simple things, just don't lose money in the markets. Timing is a big part of not losing money. You might pick the greatest company in the world, but if nobody else is buying it and it's not moving, it's not moving. And then, you got to go where the money's going and where the prices are going up. So anyway, feel free to reach out. Love to hear from you. Thanks.